Hello, this is Mi Jin from Miguk Jusikwan University. We are joined by Chief Executive Officer Kim In-jung, who always comes to mind on weekends. Today we'll continue with our United States Stock Elementary School program. Hello, Chief Executive Officer. Yes.
Yes, hello, Chief Executive Officer, nice to see you, yes.
Nice to see you again.
It seems like you caught something and your voice is really hoarse.
I know, right? Your voice, which used to be as clear as a nightingale's. I hope you don't try to fix it. I'm embarrassed to admit that. Chief Executive Officer, Anim, you look more radiant than usual today.
Maybe it's because I'm wearing dark clothes now.
Your skin looks a bit brighter. It looks good on you. Everything's okay, right?
I'm doing well.
I'm doing well. Yes, that's good. Should we say that the United States Stock Elementary School is now in the second half of the year? Yes, we're preparing some time to focus on indicators. Last week we looked at the basics of public relations. Yes, the response to the video was really good. I think it's because there were a lot of tips that people could actually use for their own investments. What kind of content have you prepared for today's show? Yes.
Actually, I was really grateful for the great response to the last show, and among them there was one person who asked a question. They asked, isn't there some kind of relationship between key money, monthly rent, and things like public relations? That's the question they asked. Initially, I planned to give a simple answer, but instead left a comment saying I'd discuss it briefly at the start of the next show. While organizing my thoughts, I realized it wasn't so simple. So the logic that determines the value of assets, like monthly rent or building prices in real estate, is basically the same. So I thought this would be a good opportunity to use something like real estate key money as an example. Just to be clear, I'm not a real estate expert. So when it comes to setting real estate prices, I can't say for sure if this is really how it's done. In the market, money and capital tend to flow toward higher percentages or returns, whether it's real estate, stocks, commodities, or even coins. I believe things move according to those percentages. When a lot of money gets tied up, prices go up, and because of these fluctuations, if we connect this concept, why are some aspects changing to resemble the premium paid for business rights when we look at companies? I thought this would be a good opportunity to reinforce and clarify these points, so I prepared this session to connect those aspects.
All right. I hardly know anything about real estate, so I should really pay attention and listen carefully today. I don't know. Then, could you show us the materials you've prepared?
Yes. Today I'll first talk about valuation, which we look at through key money and monthly rent. Second, we'll look at why a company's value changes. If you understand the basic concepts behind this, it will help you grasp whether a company's valuation will go up or down in the future, even without using any special formulas. So once you have these basic frameworks in your mind, it'll be much easier and more solid when you later look at the numerical and official aspects. First of all, I want to make it clear that I'm not a real estate expert, so I think there may be some errors or things that could be wrong. However, even when it comes to real estate in terms of returns, from the landlord's perspective, instead of investing in stocks, buying real estate and earning rental income is also calculated as a percentage. Since things like price fluctuations follow a similar logic to how stocks are evaluated, I hope you can look at it from that perspective. So Baram Hanu left a question in the comments. Listening to the lecture on stock per reminded me of this. When you get a commercial property, how do people decide things like the key money and the monthly rent? How do they come up with those amounts? I asked a question only someone who knows stock pure could answer, though I'm not an expert. I considered leaving a simple comment, but chose to make a brief video explaining it for a few minutes. However, as I organized it, I realized it wasn't so easy. So since I already gave an answer, I think I should explain it. I'll try to explain that part and relate it to stock valuation as well. Yes, I also drew a picture. So yes, first of all, I tried to organize who the stakeholders related to real estate might be. First, let's think about the building owner. So our viewers could be building owners, or they could be tenants, or maybe someone who wants to buy a business that's currently being leased. Now, there may be three interested parties. First, consider the building owner's perspective. Now, let's say the building owner has a building that brings in about 5 million won in monthly rent, so that's about 60 million won a year. Then how much would a building that brings in about 60 million won a year in rent be worth? That becomes one way of valuing the property. So when you invest in real estate, just like when you invest in stocks, the rates of return will all be different. In Korea, the average is usually about 5%. Ah, I see. Of course, in areas like Gangnam, the expected rate of return is even lower. The reason it's lower is because the prices go up every year and people buy at higher prices, so the percentage return is lower. If you wonder why the rental yield is low in Gangnam, it's not because of any other issue, but because prices keep going up. So you have to pay more to buy, which lowers the yield. On average, you can think of it as being around 5%. So, if we have an annual return of about 5%, which is 60 million won, then what's the price here? That's the question. In that case, you just divide 60 million won by 5% or 0.05. So, as I wrote here, it's 1.2 billion won. This person has assets worth 1.2 billion won. So, when we were younger, these are the kinds of things we used to talk about for fun among students. It's a bit awkward to ask directly how much wealth this person has or how much their pension is, and it's also awkward to ask about the price of their building. So instead, we ask, how much rent do you receive? If they tell you, they're basically telling you the value of their building. But if they don't know, you might wonder if they're revealing the building's value. If they say, no, I get this much rent, then you can figure it out right away. Similarly, for office workers, the amount they pay for health insurance is actually deducted directly from their bank account. Estimating annual salary from national pension is tough due to a cap, but health insurance premiums rise with income. Knowing someone's yearly health insurance payment lets you quickly determine their salary. In this structure, calculating the rate of return backward lets you find the asset's price. So the person who asked earlier, yes, here, you asked about the deposit, monthly rent, and key money, but actually that's a bit of a different topic. So monthly rent is what the building owner receives, but key money isn't received by the building owner. It's the premium that the current business owner gets when selling the business to someone else. That's what we call key money. It's different for building owners to get key money. Since you asked about both monthly rent and key money, I answered quickly at first, but with three parties and different terms, the explanation became complicated. So in the case of the building owner, they receive the monthly rent and there's also a security deposit that's combined with it. The concept is that the security deposit and the monthly rent are bundled together as one. How are the security deposit and monthly rent related? Usually, in Korea, contracts are often made like this: a 50 million won deposit with a 500,000 won monthly rent, or 30 million won deposit with 300,000 won monthly rent. But sometimes I say, the monthly rent is a bit high, so I'll lower the rent and increase the deposit. That's how I talk about it. The reason is when you increase the deposit, that deposit goes directly to the landlord. Then, from the landlord's perspective, they can take that deposit and put it in a savings account at the bank or invest it in stocks to earn a return. That's why the landlord is able to lower the monthly rent. So in essence, capitalism is a system that operates strictly based on percentages. So if you want to lower your monthly rent, you can just increase the deposit a lot. But if you don't have enough money for a big deposit all at once, then you can simply raise the monthly rent instead. That's what you call 100% monthly rent. In our country, living with a 100% deposit was basically what we call jeonse, right? Our country had jeonse, which is unique here, while overseas they don't have jeonse, only full monthly rent. Right now, it seems like Korea is in the process of shifting from the 100% deposit jeonse system to a 100% monthly rent system. What has appeared during that process is what we in Korea often talk about called banjeons. In Korea, it's common to combine the remaining amount with monthly rent in addition to the jeons deposit. Terms like banjeons or half banjeons are used, but it seems people are moving away from using jeonse entirely. Because housing prices are so high, it's not even easy to pay half or even a portion of the deposit anymore. Rather, as monthly rent keeps going up, I think we're now going through a transition into an era of monthly rent in our country as well. This shows how monthly rent relates to the deposit. So if you increase the deposit, the landlord can make a profit elsewhere with that money, so they can lower the monthly rent. So if you raise the deposit, the monthly rent goes down. And if you lower the deposit, the monthly rent goes up. I think this is how we can sum it up from the landlord's perspective. Next, let's look at it from the perspective of the restaurant owner. This was also a value relation for the restaurant owner. Let's say the restaurant owner rents a place from the building owner, pays monthly rent, and after deducting rent and labor costs, makes about 100 million won a year. So the business is doing well. They're paying rent and making about 100 million won a year, but suddenly a buyer for the restaurant appears. Oh, I really want to try running this business. So you go and meet the restaurant owner and you say, "Boss, I want to run this restaurant. Please sell it to me." Then the owner will think, how much should I sell this for? And the buyer will think, how much can I afford to pay for this? This is exactly what we call the concept of a premium. So let's say the business is doing well and the annual net profit is about 100 million won. Then how much should you pay for the premium so that from the buyer's perspective it's not too expensive, and from the owner's perspective it's not too disappointing to sell? Well, maybe about 5 times, yeah, wait. Anyway, something like that. If viewers think about it now, they'll likely have an idea too. If you get it a bit cheaper, maybe 2 or 3 times, at most 5 times, or something like that, it's like we all have this valuation that God gave us inside. But when we buy stocks, we usually turn this off and only look at whether it will go up or down, so we don't really do a valuation. Even if we don't know the formula, if someone says, you may give me 200 million won for the premium, we start to think, should I try it? Something like that comes to mind. Paying 200 million won for the premium is essentially double the annual net profit. So the concept of PR itself is about how many times the annual net profit you're willing to pay to buy something. That's why the premium is a bit similar to PR, though they're not exactly the same. Because you see, PR is, if I pay money to buy a company, its profits become mine from that year on. But with the premium, if you make a net profit of 100 million won but paid a premium of 200 million won, you won't have any profit for 2 years because you have to cover that amount with your earnings. Korean companies typically have a PAR of about 10, while American companies might have 20 or 30, but this doesn't apply to the premium. After buying, you won't see immediate profit for a few years since you've already paid the premium. So what we need to think about here is this. This situation, if this happens, the buyer can't recover the premium from the landlord, since the landlord never received it. That's why the buyer could lose the whole premium. So there are good landlords, but there are also some bad landlords who kick out successful businesses and then sell the premium themselves to someone else for the same franchise. That's why these things happen. So even though it's not common, the cases you see on the news happen because of these premium issues. So if you pay a high premium for anything, the risk increases. So when we do a valuation, I mentioned the safety margin, right? This means there's no safety margin. If you pay a lot for the premium, that's why there's such a risk. From the perspective of the restaurant buyer, the lease contract usually starts with about 2 years, and then it's extended by 1 or 2 years at a time. But when it's time to extend, the landlord might refuse to renew. So when you move in here, you've probably done all the interior work, right? You have to restore all the interiors back to the original state. Since you have to pay for the demolition costs as well, the risk for the restaurant owner becomes huge. That's why, unlike regular companies, the premium can't be set at 10 or 20 times like a PER. The reason it has to be lower than that is because of the risk involved. The reason I'm emphasizing this so much is that the bigger the risk, the less you should pay. So, just like you can pay more for the premium when there's less risk, if there's some risk, you have to keep it small and low. In the end, higher risk means a lower valuation, which means the value of the company also drops. On the other hand, lower risk means the valuation can be much higher. So if you change this risk into investment terms, you can actually express risk as a number. There are two ways to explain this, and one of them is called beta, volatility. But I said that I don't agree with this, so I don't really trust valuations that use things like asset, capital price, and decision models based on beta. The second way to measure risk is by percentage, in other words, using a discount rate. So I think this part is more reasonable. That's why as the risk increases, as in when there's a lot of risk, then I require a 20% return from this person. That's how it works. For example, if I ask Mijihun viewers to lend me 100 million won and Chief Executive Officer Mijihun also asks to borrow the same amount, then who would most of the viewers lend the money to? Wouldn't they lend it to the Chief Executive Officer? Maybe 4 or 5 people might think, well, investing in a new business could be okay and lend it to me, but most of them would go with Chief Executive Officer Mi Ji-hoon. Why? Because a much longer trust relationship has been built there. Since I don't have that trust relationship, it's a higher risk. Even if Chief Executive Officer Mi Ji-hoon offers just 3% interest, he gets 100 million won, but when I offer 10%, people still hesitate to lend me money. So the greater the risk, the higher the required rate of return, and as a result, the price drops. That's why risk and valuation move in opposite directions. In valuation, we express that risk as a percentage, discount rate, or growth rate. If you just understand that concept for today, I think I can explain it more in detail when we get into valuation more seriously later. Next, the second question is, why does the premium go up and down? I explained it earlier, but what were the factors that caused the premium to change here? Will profits stay the same, rise or fall? It's because of this that it fluctuates. So, if it looks like the profits will keep increasing, the premium will go up. It's the same with a company's valuation. Just like the premium goes up for a business whose net profit seems to increase every year, the market capitalization you have to pay for that company also goes up. So, the increase in profit and the increase in market capitalization should be the same. And if you divide by the number of shares, the growth rate of earnings per share should be the same as the growth rate of the stock price. The reason I always explain the relationship chart between stock price and earnings per share by saying that the stock price is a shadow of the direction and growth rate of earnings per share is because this applies the same way in general real estate as well. So it's not just something that works in the stock market, it applies in those areas too. Next, if the premium becomes zero, when would that be? When this person goes out of business and leaves, then you can just sign a lease without any premium. You just pay the monthly rent to this person and move right in. So it's the same for companies. If a company's profits keep decreasing and seem like they'll reach zero, then the value of that company is also zero. If a company keeps losing money and its sales aren't growing, investing in it isn't really investing. It's basically like buying a lottery ticket. In the end, the premium became zero, and if you were a regular person looking to buy this restaurant, you would never buy it. You wouldn't pay any premium. If there are just 3 customers at lunch and maybe 2 on weekends, would you pay extra for that place? You wouldn't buy it or want to run a business there, much less pay a premium. But in the stock market, what people do is, when the stock price goes up, they just pay a premium and buy it. In both real life and stock investing, a company is a real entity. We're not discussing real estate, but companies operate in the real world. And buying stocks means acquiring a right or certificate for that company. Understanding the real economy helps you view real estate and stocks similarly. So, since I'm not an expert in real estate, my explanation about this part might be a bit lacking. Or there might be some points that are different from the perspective of a real estate expert. So, from an investor's perspective, I try to organize and explain things like percentages, profits, valuation, and premium in my own way. So, I'll wrap up my answer to the question here. You mentioned it humbly, but in my opinion, it's actually a great lesson that can be applied to stock investing. I think the main point of the message you just shared is this. The premium is actually what we call quanregum, right?
It's a premium you pay because you think the business will do well. And the second rule also works well in the stock market. The reason it goes up and down, if it looks like the business will do better in the future, the premium goes up. And if it seems like the business will do worse than now, the premium should go down. It's the same with stocks. But strangely, before that, the principle before was like that. In real estate, lower risk means higher value, and higher risk means lower value. Oddly, stocks work the opposite way. Among the Korean securities dealers, automated quotation stocks, there are companies that are running at a loss, will probably need another 2 or 3 years to turn a profit, and have a lot of debt. But strangely, these kinds of stocks,
Just one piece of news.
when news breaks and a stock surges, it often jumps to 50 times the price to sales ratio, regardless of valuation. This happens frequently. So this kind of phenomenon doesn't happen in real estate, but it sometimes appears in the stock market. It's something we really need to avoid and be cautious about. You really made a great point. That's because there are things present in the stock market that aren't in real estate. In my opinion, what is it, Mr. Market? There's no Mr. Market in real estate, but in the stock market, there is Mr. Market.
There is, and real estate exists too. Of course, if things get overheated and everyone wants to buy, prices will go up. But fortunately, real-time trading
Doesn't happen.
isn't the case in the real estate market. But in the stock market, since trades happen in real time, every day you feel psychological pressure like, I'm not going to buy, it's going to keep going up. And if it drops, I'm not going to sell. So, for example, if you think there are about 10 Mr. Markets in the real estate market, in the stock market, there are about 100,000. That's why, as you mentioned, these things happen in the stock market. There are hundreds of thousands of Mr. Markets in stocks compared to real estate. It's us. We're the ones creating these phenomena. Good point. Now, let's continue and really dive into companies in this context. Yes, from now on, I'll keep giving you quizzes. The 2021 quota has now been confirmed, and now
Currently, 2025.
as of September 4th, there is a company whose net profit has increased every year like this. Wow, this is really amazing. It's a company where the net profit went up a bit, like $100 million, $200 million, then pause for a while, and then suddenly it's skyrocketing like this right now. At this point, how much is this company worth?
You buy it.
Think carefully about whether you would pay for it. That's what valuation is. So then, how much do you think would be good? Of course, if you ask this question from the opposite perspective, the price will be different. I asked the question from the buyer's perspective. I have this kind of business, but from the seller's perspective, if you ask how much they'd be willing to sell for, there's quite a gap. That's how it is, yes. But the price they're willing to sell for ultimately becomes the final price. And the price I want to buy at is usually the price where I can make a profit if I buy at that time. So stocks,
In the market,
it keeps getting traded back and forth like this. How about you, viewers? It's growing to this extent. So how much would you pay for it? At this point, it's not about the premium anymore. Suppose I earn 16.8 billion won in profit in 2025. How much would I be willing to pay to buy 100% of the shares so that it could become fully mine and I could make that kind of profit? Maybe? Chief Executive Officer, I think you should pay at least 100 times more for this, no matter what. If it's 100 times, I'll write it down here. 100 times would be about $168 billion, right? Yes, $168 billion. I'll sign here. Jihoon me. Chief Executive Officer, I'll write it down here.
should I have written more? Was I too stingy? No, it's fine.
No, it's fine. But if you look at the PR, it's 100 times, right? 100 times for you, Chief Executive Officer. 100 times is about right. Shouldn't we give this kind of growth at least?
So that's 168 billion won. Okay, then I'll
Ask you the second question. Okay, looking at this, it's already revealed that this company's performance is like this. Now I'm giving you something else. Earlier, I gave you information up to here, but now it's confirmed through 2027. They're projecting growth to nearly $3.4 billion. All right, then now your mind's...
A bit.
Are you changing your mind? Yes, a little. Did it drop or rise more for you, Chief Executive Officer? I think it should drop a little. Oh, just a bit. Then how much should we lower it? 150 times, 50 times. All right, 50 times it is. It's already 50 times now.
Is it 50 times at this point?
Is it 50 times now? Okay, here.
Should we do it 50 times now? 50 times, 2.5 billion.
Should we do it? Absolutely, yes.
If it's 50 times, that's 5.
630, around $80 billion. Yes, no, at 2.5 billion or 50 times that. Then let's estimate about $10 billion. Yes, one.
You would be willing to pay about $10 billion.
You are willing to do that. It would be great if we could actually buy it for that amount.
Yes, so one.
It changed to about $100 billion. Now, if you look, there's probably a reason why your estimate changed from $1,500 to $100 billion. I guess it's because something is going up. It seems like it's stopped or at least slowing down. So look, we're not using difficult discounted cash flow or any complicated valuation methods right now. We're really just using simple arithmetic, just calculating it in our heads. So
The growth rate.
if the growth rate drops, 100 times is too much, so I lowered it. So now, I think it's okay up to $000 billion. That's what I'm thinking. Now, I'm not ending here, but I'm going to explain one more thing. Okay, one more time, really at the very end. So now from 2026, we've looked at everything up to here. Growth continues until 2030, then averages 15% annually from 2031 to 2040. The total amount earned over these 10 years is about $133 billion, annual earnings over 10 years. $1,330, and then the money earned from 2026 to 2030 is $20.4 billion. This is now an annual average of 22.8%, and this one is an annual average of 15%. So if I invest now and invest for about 15 years, how much would I get back? I would recover about 150 billion in this situation. So I also think about how much I can pay for a company like this. So earlier, when we calculated up to this point, it was about $100 billion. But looking at it this way, isn't it still about 100 billion? Anyway, even if you put 100 billion in the bank with interest, it would end up around this amount. So people can think about it this way too. There are various things people will consider, right? Anyway, people will probably go back and forth in their thoughts somewhere between 100 billion and 150 billion, thinking, isn't it between 100 billion and 150 billion? That's the kind of feeling it gives. This company's actual market capitalization, which is currently being traded at yesterday's closing price, is written here. If you notice this, you're sharp. You nearly wrote it down. 550. From May to June, the price I was thinking about, the budget is nothing except for... How do you feel after watching, since there won't be any? Actually, the chief executive officer has gotten almost everything right so far. I was really surprised. He even got the current viewership right. So he probably thought, at this level, it's reasonable, and set the price at 957. Then looking at it like this, he might have thought he could lower it a bit more here. That's probably what he was thinking. I'm actually going to show you what kind of company this is. I think I need to buy this. Because this figure, in 2021, this company must have had a certain amount of net profit. I just made that number into 1. And since I adjusted the rest according to that ratio, it's the company's size, it's the company's data, and the viewership too. I scaled it down according to that ratio, so I'll reveal which company this is. Bindo, and I mentioned this last time, but I'll say it again. The earnings per share growth rate and the appropriate PR usually move similarly like this, but in reality, when the growth rate goes up, the PR increases more, and when the growth rate drops, the PR falls. And this fluctuation is actually much bigger. It's this big, and that's why at first people thought, shouldn't we pay 168 billion won? But as the growth rate drops, it suddenly falls sharply to 100 billion won. It's true that the profit increased, and clearly the profit later on was definitely higher than it was at this point. But even so, the viewership dropped. Like, the reason it dropped is because the earnings per share growth rate declined. It's like, in our minds, everything that could be given has already been given. So, by fighting with Mr. Market, when Mr. Market keeps tempting us by saying that the stock price will go up, I won't buy now, we keep missing out because of that. So this part, valuation, so depending on how far I look ahead, whether I invest with a 5-year perspective or I'm investing in this company for about 20 years, then why would someone like Chalim or others buy at such a high price? They're not people who are trading short term for 6 months, Since they're looking at it much more long term, they can afford to pay more for it. So they say they're buying a business, not buying a stock. I think that's a really important point. I'll now go to the website and reveal the company for the last time. Is this allowed? I think it is. Oh, really? That's an unsupported topic. This is the company. Ah, ha, 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 ha. Yes, the company is NVIDIA. If you go into the financials here, under annual, you see this value, 72,880. Now this one, no. It's at the start. From 2021-2023, I have 4,331. It came out as 10 million. That's right. Yes, that's correct. Then from about 100 million to 200 million, it rose to 200 million, fell to 100 million, then rose again. That's what happened. Then actually, we could usually know the consensus data for these 2 years, right? So when I'm earning 4,368 or making $100 million, I've actually already made about $50 billion. Especially since you said earlier you'd buy $100 billion worth. It means you can think of ways to afford things at that price. But all of this thought process, all these calculations, we've done just with arithmetic and mental math. But these things are really important. I think they're much more important than just estimating things like reducing the discount rate by 1% or raising it and so on. So how did I figure out the next year? If you look down here, we have our earnings per share growth rates, right? 49%, 37%, 19%. I just kept multiplying them. So now, up to 2026, 2027, and 2028 are confirmed. But when I tried to find the numbers for 2029 and 2030, I couldn't really find them anywhere else. So for now, I just assumed about 20% growth. And then after that, I set it to about 15%. The 15% is just my own assumption. So after calculating it with those high figures, I got the amount. And earlier, you see the market cap here, right? Yes, I considered this market cap 4,146 as one, so it came out to almost $100 billion. That's right. Then it turned out to be pretty close. So the conclusion is that at this level, it's neither cheap nor expensive. Isn't that really interesting? I think it's fascinating. It's amazing. So even if we don't use really complicated numbers, if a company's profits increase, we should pay more. And if the growth rate goes up, we pay more. But if it drops, we should pay a bit less. We made estimates. And now if we look at the valuation, in the past, NVIDIA was highly valued, but then it suddenly dropped from that high valuation. The reason is when the recent earnings report came out, it caused the stock to jump. So if you look here at this point, it jumped up and went up like this. Then, as I mentioned earlier, how many years am I going to look ahead to estimate the company's value in the future? So should I buy at this point or not? That's the question. So even though it's expensive right now, I think this company will go up like this. Looking ahead, since this is the rate of return, it's a great opportunity. However, if the company's growth keeps slowing, even if it's still growing, that's another matter. Then, instead of giving this multiple, Mr. Market comes in, and the actual PR shown in the PDF file ends up being much lower than the earnings per share growth rate. But if it's still growing, why do they give it a lower value? Well, that's just something Mr. Market can't help. That's why we look at things like supply and demand or these charts, because their actions are reflected in these charts. So if you look here in the short term, it's going through a bit of a correction, but in the midterm, it's still in an upward trend. These are the sections where things are converging. So you can see that it's going through a period of adjustment in areas where the gap has widened a lot. So, as I mentioned earlier, valuation is affected by things like profit growth, risk, and the possibility of profits decreasing. These factors influence not only real estate but also the value of companies. If you understand it this way and build up your knowledge of valuation step by step, you'll probably be able to estimate whether something is expensive or cheap just by looking at the PR, even if you don't know the exact numbers. You can get a rough idea without needing to know the precise figures. That's right. As you know, sir, I took some medicine today because I'm feeling under the weather. Honestly, I was worried before we started recording. I was worried I might fall asleep, so I even told my wife before class.
I told her I might fall asleep during the class, but it's actually really interesting. So I even forgot that I wasn't feeling well and participated in the class with a lot of interest. In the past, that chief executive officer even predicted the consensus for the next 2 years. He once promised to draw that for us, so I hope it gets completed soon. Because a few months ago, when we did a special live broadcast for our members, he drew a graph similar to the one he just showed us, using Asteralabs as an example at that time. Currently, the valuation is on the high side, but if we look at the consensus in the future, there's a high possibility it could surge. So actually, it could turn out to be a buying opportunity at a low price. That was the conclusion we came to, right? So being able to look into the future is a very important characteristic of investing. It seems like it will become a tool, right? That's correct. If it's developed quickly in the future, I think it will be very helpful. For investors, even if we only show them about a year's worth of that part, it might seem much more expensive. And it is expensive right now.
A year from now,
It might not seem expensive, but I'm not saying you should just buy it no matter what. It's just that
you should also check things like supply and demand trends before buying, so it's not too late. Anyway, when something feels expensive, there's definitely a risk of it dropping in price. When the market is volatile, watch for signals in the exponential moving average chart or supply and demand alerts from our trading signals. If you refer to those, I think it will help you save time and make better investment decisions. Yes, and as a side note, there's something I'd like to share just for fun. My intuition was especially sharp for about a year, from late 2023 to mid 2024. Whenever I picked something as my topic,
it used to increase in value several times. When I bought Super Microcomputer, it quickly multiplied in value. I got Palantir at $15, and now it's $15 zero. The same happened with Uber. It seemed like every stock I bought went up, and my instincts were spot on. Lately, though, that's changed, and I wonder if, Chief Executive Officer, you were just lucky, but that's not the case anymore. The same goes for Astara Labs. Do you remember, Chief Executive Officer, when you talked about Google on our United States Stock Elementary School show last week? Yes, I think Google is the top pick. Yes, you said that Google is the one we should buy now, and yesterday Google surged more than 9%. So since your intuition has been good lately, please don't hold back your thoughts as much as possible. There's no need to save them.
that's not necessary. At times like this,
If you're not careful, it could end up becoming scary. Please feel free to share your personal opinions openly. We'll just take them as reference, so don't hold back and speak up as much as you'd like.
that would be great. I only said that for fun. Anyway, my body.
Even when I felt unwell, I still enjoyed participating in class because it was so useful and fun. Same today. You worked really hard. I wonder what we'll cover next week. What will be prepared? Next week, we'll be creating some dividend services and investing in a dividend series. We'll continue with the indicators as well, but in the meantime, I'm actually making the materials every week, almost.
I'm not living day by day, but I'm almost living week by week. So I think it'll take about 3 to 4 weeks. For dividend investors, I'll explain how to actually invest. A high yield doesn't always mean it's a good dividend stock. I'm planning to help you figure out how to distinguish those things and how to make judgments based on the features provided in our service. Next week, we'll finally have a lecture about dividend stocks. I'm really looking forward to it. All right, understood? We'll end today's broadcast here. Thanks for another great lecture and for listening. Yes.
See you next week. Yes, thank you. Yes, thank you. Thank you. A small dream start matters. Let's build a hopeful future together. As we grow daily, do you feel excitement blooming? Let go of your greed.
It won't be any different this time either.
The result continues the process, and I'm not afraid of dark adjustments.
I'll hold Miju's hand and go out, becoming the light of an unseen tomorrow. Happy investment. Cheering on each other's dreams, walking together down a beautiful downhill path. A happy investment. Together with Miju, all of us, until the day we boldly retire with national stocks, all together. I'll hold your hand and become the light of an unseen tomorrow. A happy investment, cheering on each other's dreams. Let's walk down this beautiful downhill road together. A happy investment, together with Miju, until the day we all boldly retire with national stocks, all together.